If you've been watching a lot of stock trading videos, the thought may have crossed your mind, hey, maybe it's too late for me. Maybe it's too late for me to get in on this stock trading frenzy. Well, I'm here to tell you, it's never too late. But there are a few things you're going to have to know to get in on it. So we're going to talk about that coming up next. Hi everybody, my name is Dee Burks and this is Retirement Rescue, where we talk about how to make money, save money, and create a retirement from nothing. Well, if you've been watching my channel for any length of time, you know that one of the ways that I'm creating a retirement from nothing is trading stocks. Now, if you're over 50 like I am, or even if you're in your 40s, you've probably thought, oh, it's too late. Because all you hear on the news is, well, if you invest $100 a week from the time you're 19, you'll be a millionaire. It doesn't matter. I can tell you that right now. Because number one, almost all of us don't do that. In fact, virtually no one does that. It is a very, very tiny percentage of people who invest perfectly. But yet so much financial advice has this long time window. Now, I'm not saying they're necessarily wrong because yes, time works for you way more than money. But if you're on a short timeline like I am, I'm 53, and maybe you're in your 50s or even 60s or older. But that doesn't mean you can't create something from nothing. We all can. But in order to create what you want and meet your financial goals, you're going to have to think about things a little bit differently because you don't necessarily have that long timeline. And one of the first things you really need to focus on is age is just a number. It doesn't matter if you're 15 or you're 50 or you're 85. It doesn't matter. If you're willing to get in there and learn, and you're willing to educate yourself, and you're willing to do it, willing to do what you need to do to invest, it's never too late. There's no such thing. Now, usually when I say that, the first thing someone, especially someone who's my age or older, will say is, oh, but my investment advisor says that's just risky. Well, of course he does. He doesn't want to get sued. Because if you tell someone who's over 50 the things they're going to need to do in order to make a really good return on their money, because they don't have that long timeline, yeah, those are risky investments. They're not going to tell you to invest in anything risky because they are required to have a certain fiduciary responsibility for your money. In other words, they are supposed to tell you not to invest because you might lose money. And for me, I sit there and think, I know that. I realize I might lose money. So I don't have a problem with doing things that are risky because my thought is, okay, if you have 0 at 50 and you try some investments that don't work and you have 0 at 53, have you really lost anything? Well, not really. You've lost a few years, and honestly, you've already lost 30 years by not saving and not investing, so have you really lost anything? My thought is not really. At least you tried. And that's what I want to do. I want to try. I want to give it my all, give it my best. And there's no reason that you can't get in there and meet some of your goals if you learn and educate yourself. But don't expect your financial advisor to be on board. They have to sign a lot of paperwork that says they're advising you correctly. And if they tell you something incorrect, they're on the hook for it. So don't expect them to be on board. Now that kind of brings up the next idea. And that is the idea that in order to do something different, in order to earn a better than average return, you're going to have to step outside the box. You're going to have to think about things differently. You're not going to be investing in a way of someone who's going to earn 4, 5, 6% a year. That's not going to get you anywhere. It's really not. And especially when you're older, either you have to get a big return or you might as well not do it. And here again, I would never tell someone to use all their assets to try some of these risky ideas. But there's nothing wrong with you taking a small percentage of what you have and giving it a whirl, especially if you really need that income for retirement. And you know you're going to be short. one of the biggest concerns of people over 40 right now today is having enough money to retire. Once you hit that 40 mark, you start to realize, oh wow, retirement's a-coming. And those years are racking up and you don't have the money to invest like you would like. Well, you're going to have to do something different. So you got to be willing to step outside that box, willing to do things differently, willing to take perhaps a little bit bigger risk. Now the same is true, I think, if you're very young. If you don't have a lot to begin with, and you do have a long timeline, it makes sense you can do things more risky. And investment advisors would be on board with that because you're young. But they'll give you completely different advice once you're over 50. So just realize they are doing it to protect you and to protect whatever assets you have. But my thought is, I need to build wealth. I need to do it quickly. So I'm willing to take the risk. That's how you need to look at it if you're going to try to get bigger returns. Bigger returns bring greater risk, and you have to be willing to accept that risk. And really, when we talk about is it too late, there's no such thing as too late. What you have to look at are your goals and your investment objectives. Now, if you're wanting to invest $100 and magically turn it into $10 million by next year, yeah, that's probably not going to happen. So when you're looking at your goals, you look at, okay, how much money am I going to really need to be financially independent? Because that's what retirement is. It's financial independence. So when you get to over 50, as we are now, then you need to look at everything you have at your disposal. Are you going to have any disability? Are you going to have any military benefits? Are you going to have Social Security? What are those amounts going to be? What is the difference between those amounts and what you're going to need to live on a regular basis? Now, a lot of people start out investing as a hobby, and it's a great hobby because you learn so much. But at some point they realize, oh wow, I need to turn this hobby into something serious. Those people I find have a much more difficult path because they have convinced themselves that traditional investing, the trying to earn, 4, 5, 6% and investing in really safe companies is the only way to go. And they have a hard time figuring out, how am I going to improve this? But here again, once you realize you have to step outside that traditional mindset, you will find ways and be able to enhance your return. Really, the biggest issue for a lot of people is getting past the fear. But they convince themselves that they're not able to learn something new, which is ridiculous. Of course they can. Anyone can. Stock investing is not difficult, but it has its own language, its own vocabulary, its own techniques, its own skill set. However, this entire skill set you can learn on YouTube. You can learn it on a trading platform like Ameritrade or Schwab. They have free education. You can teach yourself anything you want to know. If you want to day trade, if you want to trade in penny stocks, if you want to trade options, if you want to do all of those things, you absolutely can. But you must commit to educating yourself. And it's not hard. Anyone can do it, no matter their background. And there's no reason to cut out stock investing just because you're afraid of it. Nothing helps get past that fear like education and becoming familiar. Once you're familiar and once you're comfortable, you can step into that world and really take advantage of it. Get in there. Learn. You can't win the fight if you don't throw any punches. If you're not in the game, you can't win. So get in there. Learn. Do. And you can be one of those people that is taking advantage of big growth in the stock market. Now, if you've enjoyed this video, please click subscribe, and I'll see you next time.